Goldman Sachs has come out and said that, and this has got to be quite worrying if you're in the market, that the uncertain macroeconomic outlook, the volatile oil production from Iran and other places, of course, in the world could well lead to OPEC rolling over on their supply cuts, and that's going to have an impact on prices if indeed that does happen.
Yeah, look, and that's probably the other reason why the oil prices have just started to react a little more to the downside, because we know OPEC have been very good over the last probably 18 months in terms of keeping to some sort of supply constraint numbers. But if they do decide to start producing more and more than they should be, and they're currently at, what, just over 30 million barrels, which is 500,000 barrels less than where they were at the start of this year. So you can see they're still cutting at the moment. But if they do roll over, look, they could flood the market as we've seen before, and we could see the oil price significantly lower than the $60-odd where it's trading now. But we don't believe OPEC are got the appetite to do that at the moment.
Okay, so David, when you look at the crude price, of course, the next 6 months hold numerous uncertainties. One of the biggest ones we've been talking about is a trade dispute between the US and China. Of course, that impacts the oil market and the commodities place in general as well. But when you look at the next 6 months, where do you see prices at the end of 2019?
Oh, look, certainly we haven't changed our end-of-year price for Brent. We still leave it at between $74 and $84 a barrel US. So all throughout this whole year, we've kept that price pretty much without shifting it. We believe that OPEC will continue to constrain production at somewhere around 30 million barrels. We've been quite comfortable with the demand scenario that we've been seeing roll out. Yes, the trade wars have just put a little bit of uncertainty into our mind, but we think 100 million barrels is about where 2019 demand will fall in at. That's marginally higher than last year. So if that's the case, then we can't really see the oil price wanting to dip much below where it is. And in fact, we believe it should be probably rising higher, apart from, as I said, the furphy that investors get when they look at those US inventory numbers.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.